uses those. And that would start it out. And then you start looking at who can service those different industries. Would it be a linen company for your restaurants, wholesale beer distributors, floor cleaning? And you start building from that, because you want to start, when you look at a new client, like on break, we were talking about, would certain businesses be a good fit? We won't sign up a client unless we know we can bring them business and help them offset expenses. And so it's a pretty big world out there. I mean, sometimes we're shocked when somebody calls us and our first reaction might be, I don't think we can help them. Then you start thinking, or that person starts telling us reasons why, then the light bulbs start going off.
Well, it's amazing. I've dealt with Brian here for a few months, and it's really interesting. He's very creative. It's really, really interesting.
And you said something also off the air about it being, not an answer for a company that's like dying for business. I forgot how you put it. I thought you put
vitamin supplement.
Yeah.
So I didn't coin that myself, but somebody I worked with for a few years coined that term. And what he had said was, trade should not be looked at as a lifeline for a failing business.
Got it.
This is a vitamin supplement for a healthy business. And couldn't have been said any better.
Well, give the example with the gentleman with the handles.
Yeah, that was a great story.
Cool
Share
story.
that one, please.
Yeah, that was interesting. Our wholesale beer distributor, Bison Brew, which is an organic brewery out of Berkeley, he called me one day and said, hey, we're going to start putting our beer in kegs and hitting the restaurants. I need some tap handles. And I just, geez, we don't have anybody
who makes tap handles? Yeah.
But, started, hung up the phone and just started thinking, and I spoke with Dan later that day, and we had this great idea. He was going to get the materials. This is something our auto body shop wouldn't normally have. We took the materials he needed to an auto body shop. They put the tap handles together for him. So the auto body shop thought it was great.
Using their spare labor.
Exactly.
Yeah.
It was exactly what it
Because
was.
otherwise, exactly. Otherwise, they're just sitting around doing nothing.
The employees are getting paid by the hour.
Right.
Yeah.
And his employee thought it was awesome. The guy who actually put these together thought it was the coolest days at work. Instead of sanding a car, he's putting tap handles together.
That's amazing. Any other fun stories you got like that?
Oh man, it can all vary. Let's see.
Yeah, that's okay. Yeah, well, it's interesting. I was talking before I knew about these trade organizations, where we had a roof that needed to get done, but the bid came in at $15,000. And at the time we were going, that's a little too much. We don't know if we really need it. And so we just did nothing. A week later, the guy calls us back and says, listen, here's the deal. I'm in between jobs, and I don't want to let my laborers go, or else I won't be able to get them back. I'll do the job for $10,000. And we said, sure, okay, that's a good price. And so we went ahead and did it. Now, that's the kind of organization where, again, it's very similar to an auto body shop, where if you're going to have to pay these guys anyway, you might as well at least get something for it. And if you can get trade, and especially if you have to pay a fee of only, roughly 5%, for every $1,000, it's only costing you $50.
So if you're thinking of it in terms of what is your business capacity operating at, so particularly when you've got hourly employees, and if you're operating at 70 or 80% of capacity, wouldn't that be really cool to put some of that excess capacity to work?
That's good. That's a good point.
Exactly. In fact, that model there, hotels,
perfect.
It's perfect because you have a hotel room there that you're going to have cleaned up the next day anyway. Might as well put people in there.
Yeah, because an empty hotel, or even airplanes, actually they should do it for airplanes too, but that's kind of hard to get United Airlines to do that, isn't it?
Yeah, it would be.
Yeah, but hotel rooms, I mean, what's the income that comes in off of an empty hotel room? Nothing.
Right. So what do you call the currency that you deal with at Pacific Exchange, Pacific Trade Exchange?
Well, all of us call them trade dollars. Some people might refer to it as barter dollars, but in the industry-wide, it's known as trade dollars.
Yeah, because you're not really bartering. When I think of barter, I think of direct one-on-one.
Correct.
You actually have your own currency within the system.
Right.
And how do you verify, or you got to make sure that people don't try to get too much, inflate the dollar, basically. How do you clamp down on that?
You mean as far as if they've spent too much or they've taken too much in?
Or they just say, oh yeah, sure, I'll do this work for you, but it'll be 50 million trade dollars.
Right.
How do you take that valuation?
Well, it's funny. The first thing we look at is we ask ourselves, why would that person be doing that? And the answer to that is always they don't feel the value is there in that dollar, so they're going to charge more if someone wants to use it. And unfortunately, since we make money based on the size of the transaction, some companies in my industry, they don't really care because they're going to be paying more fees anyway. I personally, I was in this industry directly for 9 years with another company, and I can't tell you how difficult those phone calls are later when somebody just
Yeah.
overpaid by 3 times, but someone tells them, well, you're a restaurant, you got a 30% cost of goods.
Oh,
But
that's a terrible answer.
it really is, and
Yeah.
it comes back to having the hard discussion with that seller. And you know, I give people choices. When I see somebody charging part cash or inflating, my inflation speech is pretty quick. You know, we have this restaurant gift certificate in. How much do you want? I want $1,000? Yes. Great. It's going to be $1,500 trade. Why would you charge me $1,500 trade dollars for $1,000 trade dollars a restaurant script?
Yeah.
Interesting point. And you know, it becomes a working relationship. It becomes a really good working relationship between you and the buyer and the seller. And then after that, you don't have to deal with that anymore. But they put the onus on you. Make sure when I go to spend my trade, that I have that value there.
Exactly.
That's-
Yeah.
And is that a problem with other organizations? Is keeping a lid on inflating those
Oh,
exchange
it can be.
dollars?
I dealt with some where I had a guy come out for a bid on doing some work on my trees, and his bid was like 3 times the amount that it would have cost for cash.
That's
And
horrible.
I just, you know, and he wasted his time coming all the way there because he said, "Oh, it's just trade dollars." I go, "No, these things are valuable."
Okay.
All right, guys, we have to sign off today.
How do we get a
How
hold
do we,
of-
Brian? How do people get a hold of you?
Oh, very simple. Just go to packtrade.org.
Okay, we're definitely going to have you back on the show. On a personal note, I'm going to be playing Judas, the bad guy, at Valley Baptist Church on San Rafael at 6 p.m. on April 1st. Yes, come watch your favorite host of Be the Bad Guy. And it's called The Living Last Supper, where we look just like the Da Vinci painting. And thoughts for the day. If you have a headache, do what it says on the aspirin bottle. Take 2 and keep away from children. And I saw a sign that said, "Seeing eye dogs only." Who's supposed to read this? The dog? Okay, tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks Pacific Trade Exchange for sponsoring the show. And audience, thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. And that's a wrap.
We make money.
Okay, you guys
Barter
ready?
Exchange. Yeah, we're.
Okay, here we go. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf and Brian Burke. And when we cut to the second commercial break, we ask this trivia question. What board game reportedly is the most popular game in America? And today's trivia theme is board games. Does anyone know the answer to that?
Is it Monopoly?
No, it is not. A lot of people, that's what I thought
Not
too, but
Monopoly,
it's
huh?
not Monopoly. Anybody? Anybody?
I would guess Scrabble.
Scrabble!
Oh.
Yes,
I was going to say, I don't have a clue.
the new man in the studio.
That was the last question.
Oh, right.
And that voice that you just heard was Brian Capehart, and Brian is president of Pacific Trade Exchange, and he's going to explain what is Pacific Trade Exchange. Brian, welcome to the Best of Investing.
Thanks for having me today, Edward.
Okay.
Pacific Trade Exchange is a indirect B2B trading exchange, otherwise known as a barter exchange. There's a few of us out here on the street.
Okay.
What we do is we make it possible for clients to utilize an alternative currency in order to indirectly trade with other members.
Okay.
Being that a restaurant buys advertising from, let's say, Marin Magazine. Instead of them using cash, they use restaurant gift certificates, for example. So in essence, they're trading on their cost of goods for that advertising.
Okay, and so they might get business that they might not otherwise get.
Guaranteed new business.
Okay.
Wow,
And-
how big a market is that, Brian?
As far as industry-wide?
Yeah.
Industry-wide, if you look at, go to a website called IRTA, International Reciprocal Trade Associations, they're banking it at 4% of our GDP, or right at $63 billion a year annually is done in trade.
Okay.
So that's how big the barter industry is. 4%. Wow, that's big.
But one thing I think you have to explain to the public here is that it is legal, and they get there are 1099s that get issued by the IRS. It's not some underground economy.
Right. You know, that's funny you bring that up. A lot of times when we're meeting with a new client, you see the look in their face of, this is too good to be true. And that's usually when I'll chime in and say, you know, at the end of the year, you're going to get a 1099 Schedule B, which is for your
The
barter
value of the service,
exchange,
yeah.
or so you still pay taxes on the revenue that we bring you.
Okay, and potentially though, they'll get the tax deduction if they're using the trade for their business. So a business that needs, a plumber specifically in their own building that they use for writing off on their taxes would be a deduction anyway.
Exactly. We're not an accountant, but typically anything you spend cash for on your business, it's a write-off, would be the same thing in trade.
Exactly, and I was explaining to Brian the other Brian Burke here, the type of business that you are in, and at first I was thinking, gosh, the kind of business Brian is in with raising money for investments in rental properties, there may not be a fit. But then Brian, you actually brought up the point. Go
Yeah,
ahead.
I said, we also have a real estate brokerage firm. So I said, in one respect, we could have a plumber work on our rental house, and in exchange, we could offer real estate brokerage services to someone selling a house, for example.
Exactly.
So it seems like it's multidisciplinary. It doesn't really matter what you do. If you exchange money for your services, you could utilize something like this.
And I'm going to give you a little plug here, Brian, because for a couple of reasons. First of all, your fee is only 5% compared to a lot of other companies that are 6%. But in theory, if there's just a specific situation where an electrician needs a plumber and a plumber needs an electrician, they don't need anybody else. But that's rarely the case, and especially if the plumber's bid is $1,000 and the electrician's bid is $10,000 because of the type of work. I mean, that's not an even trade. So your company acts as the brokerage,
Correct.
and it's sort of like its own currency.
We look at it as, in our company, we're trying to rebrand our business to be a little bit different, where we're a community of member businesses who indirectly trade amongst each other. I tell every one of my clients, it's not my exchange by any means, it's your guys' exchange. We're just managing it.
Yeah, and what would happen, I guess, is because I'm a member of your exchange, and so what I would do is if I needed a construction guy or if I needed a good restaurant or something, you have a directory, or I could just call you up because you offer that personal service.
Exactly.
Yeah.
So how would I know if my business would be a good fit for that kind of service?
Well, typically I tell people to think about your margins. If you have a better than a 70% margin, you're doing great. For somebody, for example, when somebody says, hey, can we get some new computers? It's just not going to happen typically, because those computer resellers have a very small margin. That's not to say we don't do excess inventory deals at times, which in fact we're currently doing that right now.
Yeah.
But if someone has a good margin, they have room for extra business, they're a good fit.
Especially if you're a labor service provider, like
Exactly.
you mentioned, a plumber or an accountant or somebody who you're basically selling your time for money. That's an excellent fit, it would seem to me.
Oh.
Now, if you had to buy a lot of materials or things that go into what you're doing, I could see where you have some constraints there.
Exactly. It just comes down to what's called the liquidity of the dollar.
Yeah.
The example you just brought up, construction, if you have to lay out a lot of cash. Well, if you were going to spend, let's use $1,000. If you were going to spend $1,000 on, let's say, printing, you can either write a check for that, or let's say that $1,000, we'll call you a handyman right now. You did a $1,000 job, but you had $600 in parts there. At the end of the day, you're still saving $400,
Yeah.
and we brought you the job. So it all comes down to people, what they can spend their trade on.
Is
how
there-
they can
But there's
reinvest
also
it.
a combination.
Yeah, I was
it
gonna say,
doesn't
is
have
there
to
a
be-
hybrid
There
where-
is,
yeah.
especially in that exact example with construction, where the guys, the trade guy might say, listen, I'll do the job for $1,000, but my materials are $600. You got to pay at least the $600 in cash.
Yeah, if it's
That's
something
still
they don't
good.
currently stock. I mean, that's how we look at it.
Yeah.
Because if that $1,000 job is going down at a restaurant they frequent, that restaurateur is going to say, look, people come in here, they eat our food, they leave, and we have to come out of pocket for that food, so why don't they pay us 30% every time they come in and eat? Some people would say, that sounds good, let's do it. That exchange won't be around. Managing clients' expectations and managing the way clients buy and sell, that's the key to having a very strong trading relationship
Yeah.
with your clients.
Yeah, and here's the funny thing. I was telling Brian earlier that a lot of people might think, well, you deal in trade, they're going to inflate the currency type of thing. But in a couple of cases, it's been amazing. I've actually gotten bids lower on trade than if it was an all cash deal, just because it happened to be the human being I was dealing with just happened to be somebody who was willing to do it for a decent price.
More
Well,
realistic.
So
Isn't
it's not
there the
always.
general expectation that there's going to be some cost savings? Otherwise, am I missing something in how this works in theory? I mean, generally, otherwise, why wouldn't you just pay cash for the simplicity of it?
That's a good point. Let's say today if you need to spend, again, let's use $1,000. That's going to come out of your existing cash flow, what you do currently to generate that cash. Where the cash savings comes in, one, we're going to hand you a deal. We're going to say, here's somebody who's going to buy your product right now today for $1,000. So now you have a new deal there. You know the cost of that, let's say, was 30%, so $300. When you spend that $1,000 in trade, you just saved yourself about $700 because you're using
Yeah.
a different currency.
Well, who it really works really well for are, like, the Raiders and the Warriors. They do it on trade because they'll have excess tickets, and once the game is over, those tickets were useless.
Yeah.
So it's better for them to throw them in the hopper in a trade company. So it's not just a mom and pop. I mean, there are trade organizations who have big ticket items like or well-known companies like the Raiders and the Giants do it. I think the Giants do it also.
Oh yeah, I think they trade with one of my competitors over in the East Bay.
Okay.
Yeah, I think luxury suites, things like that.
Yeah. So it's, but again, the thing that's good about yours is, why don't you explain about how the 5% fee works?
It's pretty simple. A lot of times people think it's 5% of the transaction, being that we're gonna, $1,000, we're gonna keep $5, but that's not it. We charge
$50.
5%. Sorry. Yeah, who's your broker here? huh?
Yeah, $5 done. Go ahead.
We charge 5% cash on every one of the transactions. So when you spend $1,000, your bill's gonna be $50, and that's where how those fees are generated. Typically, we'll charge a monthly service fee depending on the account as well, but the bread and butter are the transaction fees. And with that said, if you spend 6 months to a year on a trade exchange, you may have bought some great things like, let's say, Raider tickets or limousine trips. Then your accountant comes in, or maybe a wife, a partner, etc., and says, look, you just spent $10,000 last year, and you bought all this personal stuff. This doesn't make sense. We're not taking trade anymore, even if you had a 10% cost of goods. Where our company is a little bit different. When we work with clients, we schedule out exactly where they're going to be reinvesting the trade dollars. You can either spend trade dollars or reinvest them. Investing meaning you're going to get a return. I work diligently helping people place media buys, buying things like wholesale beer for my restaurants, wholesale bread, wholesale wine. Things are going to absolutely be able to bring cash business in. So if that conversation, if it ever comes up, I can quickly look at the account, say you spent $10,000 in things you would have written a check for, and it brought back the cash.
Huh.
Solid.
Okay. Guys, we're going to cut to our third and final trivia question, and again, the theme is board games. What board game has various characters such as Queen Frosting, Lord Licorice, and Grandma Nut? The first three callers with the correct answer win a free 3-day, 2-night stay.
Up with this stuff?
Yeah, I asked the kids. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What board game has various characters such as Queen Frosting, Lord Licorice, and Grandma Nut? Call 888-912-1190. Make sure to include your name, address, and email address, and spell it out and speak slowly, and we will be right back. Good.
Awesome.
I hate my voice.
Just make sure
Nothing
when
you can do
I
it.
know it's hard, but there's a temptation to talk like
I
this,
know.
and you just pretend that you're connected here, and you just pivot. That's all you have to do is just pivot.
I don't know. I don't have a clue. What is it?
Candyland.
So when
Yep. All right. Take care.
Hey, good
Brian,
meeting
it's nice meeting you.
It's a pleasure meeting
Take
you
care.
too. All right. Good luck. We'll see you again.
You know, mind if I mention you?
No.
Okay. See, Kramer's a good example, right? He's a videographer. You might have a need, someone who's got a need for. He doesn't like to do weddings, but let's say for their website.
He used to be with my competitor, and he could call them and say, I need to get tap handles made. Sorry, we don't do that. Calls me. Let's think about this. Auto body shop. So we turned around and got 350 tap handles
The auto body
made.
shop made it.
Yep.
That's a
Dan
great
brought in the
story.
material for him. wants it. I can keep this one guy over here working every day for the next 3 days doing these and earn 150.
Well, because that's the thing is he's not going to lay off those guys for 2 days and then say, okay, come back. I had that a roofing situation when we owned a building across the street here, and it's like we needed a roof, but it's like I don't know if we really need, because we're going to sell the building, and we got a bid of like $15,000, which was not too unreasonable, but we just weren't ready to pull the trigger. And the guy, the roofer called me like a week later, and he goes, Edward, listen. He goes, here's the deal. He goes, I don't have enough work right now. If I lay these guys off, I won't be able to get them back. I'll do it for $10,000.
Yeah.
And it was
That's how I got my cabinets built for my last house. Same thing. It was like, oh God, you guys are so expensive. And literally within weeks, he said, I'm between projects. Look, let me just
That's
come
it.
down and I just want to keep busy.
Yeah.
Exactly.
Now the thing is, if you were in a trade organization, you could still do that, right? It doesn't have to be cash. In fact, the guy could say, listen, I'll do it all for trade.
Right.
Yeah.
It all comes down to where people are spending. My competitor, they try to do things all at 100%, like on construction and whatnot, and then you'll find out that they might talk somebody into doing 1 or 2 deals, and then they're not a client anymore.
Exactly.
And what I do is I'll work, because I am the guy in the middle when I've got to explain to a restaurateur why they're paying, say, 20%, 30% cash for a new roof, for example, and they give me people come to my restaurant. Well, I know these are incremental sales. You would have thrown away the food. He's not storing these shingles in his. I can come back with all those arguments, but I try not to. But then it just helps them understand that this is still a huge benefit. It's either you do it or you don't. So instead of talking someone into doing these big jobs like that, that's what my contractor. We're doing some pretty big contracting jobs right now.
And it's better to just and to do some cash and trade just to get the deal done rather than lose it.
Yeah.
Right.
Yeah. And what do you do if you can't find? Do you? I mean, if let's say I asked you for something and you just don't have it in the system and can't make it, then what do you do? Just say no, or do you push it on to a competitor, or what?
Well, that's funny because we're actually pretty good at calling people back and letting them know we don't have that.
Yeah.
Because no, it's either we find out 2 things: either we have it in the network, or we're gonna go after it because you've supplied us with a couple of bids. Because we work together on this one.
Yeah.
But then we come back and say, hey, we have a new client. He's ready to do your job. Or here's what we have found why it does not work for this industry. Because we don't claim to know everything.
And do you trade dollars with other organizations? No. Okay. Because the couple of them do.
Yeah, we do reciprocal.
Well, that's what I mean.
Yeah, I'll do reciprocal things, but that's going to a third account between the two, where some companies actually honor each other's currencies.
Yeah, that's what I was thinking of honoring.
And that's they've tried that one before, and it just becomes a big mess.
Yeah, because I don't want a credit balance on my. Okay, you guys ready?
Yep.
Okay.
I'm ready.
Good. Okay, so I go 4 seconds of silence here, and we got 9 minutes to go. Ready? Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, in the studio with Mark Hanf, and we have a guest, Brian Capehart of Pacific Trade Exchange, who is actually the sponsor of the show. We love that. Okay, here's the trivia question. What board game has various characters such as Queen Frosting, Lord Licorice, and Grandma Nut? Anybody?
Well, you got to have little kids to know the answer to that. It's Candyland.
Candyland, that's right. And I got to tell you that that's one of the most competitive games in my household. I am ruthless. Do not play Candyland with me. The kids end up crying. It's a mess, I'll tell you. Okay.
Great dad.
Yeah, you love it. Kids love me. Brian, you are with Pacific Trade Exchange, and we've been talking about the various aspects of your company. And Mark, I think you had a great question.
So you started out, Brian, by saying you're more of a B2B exchange, which I guess means, like, as a consumer, I wouldn't just log on to the site and be able to, like, engage with your clientele or barter, because unless I have a business, I need to have something to offer. So what is there an industry that, like, is the most popular type of industry, or is there a group of industries that are kind of like the most popular participants in this exchange?
Well, your foundations typically are going to be your media, your restaurants, and your travel. Because everybody...
No, that's right.
All right.
So that sounds like something from a Lucy episode, Lucy, where he says, because I don't understand. He goes, I don't get it. Let's just get out of here. He goes, that's right. Okay, here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Brian Burke of Praxis Capital. When we cut to the first commercial break, we asked this first trivia question, and the theme is board games. What board game involves solving a murder using weapons such as a candlestick or rope? And Professor Plum, what's the answer, Brian?
Oh, right. Yeah, I never know the answers to any of your sports trivia. Now you throw board games on it, I just don't have a clue.
That's
So-
right. That's exactly the answer.
Really?
Clue.
Oh, how about that?
How about that? Very good. All right. Let's get right into email time. Mark, here's an email that we received from a listener. It says, I have heard you mention on the show that you don't do residential loans. Now, the question is why, but you actually do residential. It's just you don't do personal
We don't
residence.
do owner-occupied
Owner-occupied.
residential. So let me just back up a minute. I'm president of Pacific Private Money. We are a private money lender, also known as a hard money lender. And so for those of you out there who've probably heard that term before, ever since the banks really kind of tightened their lending criteria after the mortgage meltdown in 2008, they really stopped making loans to real estate investors for the most part. What they're concentrating on is consumer home loans. So if you want to go out and buy a home today, the rates are fabulous. But if you want to buy rental property, because you believe California homes are on sale and that you can get good rental income for the price you pay, which is true, by the way, or if you want to buy fix and flip because you believe that there are opportunities to buy properties at steep discounts that with a small amount of investment can be put back on the market and resold for a profit, which, by the way, is true, too. It's being done daily in markets all over the Bay Area. You would come to someone like our company, Pacific Private Money, and fill out a loan application. We make between 15 and 20 loans per month to real estate investors. And the reason we don't do consumer home loans is, quite frankly, the government doesn't want us to. What do I mean
Wait,
by that?
hold on. What does that mean? It seems counterintuitive.
Well, after the horses left the stable and the mortgage meltdown, a lot of politicians decided that they were going to make sure that never happened again. So they were going to punish those predatory lenders for making bad loans to people who couldn't afford to pay them. So they passed a whole slew of new laws that essentially don't allow companies, or banks for that matter, to make a loan to people who can't afford to pay them. So, and particularly when it comes to a consumer home loan, a home on your or a loan on your primary residence is governed now by about 20 new laws that weren't there 24 months ago. And they include things like minimum period. For example, we can't do a loan, generally speaking, for less than 7 years, and it can't be higher than a certain interest rate. But more important than that, you have to qualify, full documentation. We have to prove that you can actually afford to make the loan payments, and that's a problem oftentimes in our industry. So, because if you can't qualify, you're going to go to a bank anyway, so you're not going to come to a private money lender.
Let me ask you about the qualification, full doc. Let's say someone shows you a tax return that doesn't seem that they can qualify, but they have other things that they produce that make it look like they can, like bank statements or some other. I mean, I'm guessing that there's maybe a lot of companies out there, a lot of people out there who are in cash businesses. They don't want to report the income, but yet they're somehow able to prove to you that they can document it.
Well, the good news is that there are private lending companies in the Bay Area that are making consumer home loans. So if you can't qualify for a bank loan because you've had a foreclosure, but you've got income, there are companies out there. We just happen to focus on a niche of, we serve the real estate investment community. We like rehabbers and flippers and folks like that. So that's our niche. There are companies in the last 12 months, and if anyone wanted to know who those are, I'd be happy to refer you to those companies. These are good companies in the Bay Area that will make consumer loans. They're obviously not at bank rates. Now they're going to be anywhere from, I think the lowest I've seen is 7.99 to like maybe 9.99, in that range for a purchase money loan to buy your primary residence if you don't qualify for a bank loan. So there are options out there, but generally speaking, the type of loans that we're looking at Pacific are generally loan applications for people who want to buy fix and flip or buy rental property.
Okay, and before we get into email time for Brian, there was something we talked about before the show that I thought was kind of fascinating, that you have lenders sitting by who have lots and lots of money, but they're not lending it out yet because they're still demanding a high rate. But yet you could potentially place the money for them if they would lower their demands. Why don't you get into that a little bit?
There's a phenomena right now where if you've lent your money out privately before, and listeners to the show, some of you may have heard or be familiar with trustee investing, as it's called, and that basically is where you fund a loan to an individual who's buying real estate, who owns real estate, and traditionally you could get very, very high rates. And what I mean by that is, 10, 11, 12% was not unusual. And so we're in this market now where there's a strong demand for capital, but there's a strong demand, and Brian, I know you want to chime in on this, is for lower priced capital. In other words, if I could find lenders willing to allow me to loan their money out at, say, between 6 and 8% safely with a very, very secure loan, I could do a lot more loans to the investment and commercial community.
And those lenders would be able to place their money rather than
more
having
quickly.
More quickly.
So I've
Otherwise,
got
right
these
now-
guys. So I've
yeah,
got these lenders who are used to getting 11 and sometimes 12%, and they're sitting around with their money, earning nothing in a money market account, waiting for me to call them with a funding opportunity, and I'm not. Because quite frankly, there's just not that much demand today for 12% money, but there's a tremendous demand for 8, 9,
Exactly.
or
And
10%.
let's say it took 6 months.
Yeah,
Then
and how much do you lose?
If it takes 6 months, you finally get them 12%,
Yeah.
and it's only, let's say, a 1-year loan, then in theory they really lost 6. I mean, they're really getting 6% because it was at 0 for.
Well, here's the
6%.
other thing too. As you've seen housing prices fall and rents rise, more and more people are beginning to realize the value of owning rental property. And as that happens, and you want to finance that rental property so that you can leverage your investment, you're going to see more and more demand for rental property loans. Now, if you're doing a rental property loan, obviously you want to minimize your interest expenses as much as possible. So there's a huge market developing right now for low-priced but easily funded loans, and private money is a great venue for this. And you could probably place a lot more money in that particular venue if the lenders that were in control of the dollars were willing to accept that. Now, the benefit for them is this. If you're lending at 10% to somebody who's flipping a house, you're doing great, but that's going to pay off in about 6 months. Then you might have to wait 1 month, 2 months, maybe 3 months before the next house flipper comes for you to loan your money again at 12%. So if you had it loaned out for 8 months of the year at 12, what does that have to equal to if you lent it out for the entire year or 2 years or 3 years at a lower interest
basically
rate?
the opportunity cost can outweigh if these.
You're going to net the same either way.
Or
you can charge
potentially
a lower rate and still net the
Yeah,
same or
and,
more
and,
money.
and in theory, if you are able to get lower interest loans out there, theoretically they should be a little bit safer. Theoretically.
Yes.
Well, it is safer because if the borrower has a better ability to afford to make that payment, it is by definition
Well, that's a good
a
point.
safer loan. Then you've got the double safety of having protective equity, meaning you're only loaning, let's say, 65% of the value and no more than that on the property.
Well,
But
what-
then you've got the borrower who has
Lower
income,
interest payments,
and he's making
yeah.
lower interest
No,
payments.
but I was thinking about a borrower comes to you and says, "Listen, I got a slam dunk deal. It's only 18% loan to value. I've got great credit and all that, but for whatever reason I can't go to the bank. Maybe speed." And he says, "But I've got
If you could get me 7%,
exactly."
right, yeah. And I would say I'd love to, but I'm going to call 15 or 20 investors, and they're going to go, "Oh, that's just not enough."
Yeah,
And
but
so-
you know what though?
so
We
there's-
have people in the audience right now who would love to get 7%.
Yeah.
I'm sure.
right, rock solid safe.
Yeah. So, Mark, how would people get a hold of you for that?
They would call us at Pacific Private Money at 415-883-2150. That's 415-883-2150. Or go to our website, which is for investors. We have a new website. It's called PacificPrivateInvestments.com. That's plural, PacificPrivateInvestments.com.
And they could always go to Best of Investing
Absolutely.
and catch you there. Brian, email for you we received, which is, have any of your investor clients ever lost money investing with your company? So tell us what your company is.
That's
first.
a pretty good question, actually. I think a lot of people will be interested in that. My company is Praxis Capital. It's Praxis, Praxis Capital. We're a real estate private equity firm. We invest in rental property and buy, fix, and flip real estate here in Northern California. So in answer to your question, Edward, the answer is no. Nobody's ever lost money with our firm, which, in an equity investment, that's what we're doing is equity investments. The investors in our company actually own a fractional percentage of the real estate, but not directly. They own it through a fund. Now, whenever you own real estate in a fund, you're always subject to the potential of loss, because if the project loses all of its money, investors are at risk. So these are a little bit higher risk investments than a trust deed investment where you have security against the real estate. But we're very conservative and disciplined investors, and we've never hit a loss yet. In fact, I had a 7-year period where even when the market was moving against us, our investors were earning just over 20% return on their
that's
money on an
amazing.
annualized
That is
basis.
amazing.
And to do that in a down market is pretty good. But I mean, one thing you've got to realize, and just to clarify something I mentioned earlier about median California home prices, statewide the median is $260,000 currently, but in the markets where we're doing our business, our median prices are about $140,000 in some Northern California counties where we're operating. And when you're dealing with property in that price bracket, in that very lowest tier, there's a lot of stability. The risk is a lot lower. We're buying properties for $80,000 to $110,000 that bring in $1,100 to $1,500 a month in rent. So that reduces the risk tremendously, and it's pretty hard to screw that up.
I mean, you're buying those at like a 7 gross rent multiplier.
Yeah,
That's ridiculous.
As low as 5, actually. As low as
5.
Yeah,
and
yeah.
especially with interest rates low. Now, you buy yours for all cash, right?
We buy them for all cash.
Well, you're buying from the auction, right? So you're
We're-
getting that for the most part?
Yeah, for the most part. We're about 75% auction, about 25% bank owned, and short sales.
All right. And how do people get a hold of you, Brian?
Best way is to go to Praxis Capital's website. It's www.praxcap.com. That's praxcap.com. There's also a link to our website on the show's website,
That's right.
bestofinvesting.com.
All right. We're going to cut to our second commercial break. Here's the trivia question. Again, board games is the theme. What board game reportedly is the most popular game in America? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What board game reportedly is the most popular game in America? 888-912-1190, and make sure to include your name, address, and email address, and make sure that you spell your email address for us. And we will be right back. And you'll like Brian. He's very. He's got a. He's kind of an animated type guy.
Yes.
All right. You ready, television audience?
Yep.
Hello, people in television land. Okay, so the scruffy look is going to be for a while because April 1st, I'm going to be playing Judas Iscariot, the bad guy, in a play at Valley Baptist in church in San Rafael. And the cool thing about it is we are just like the painting of the Last Supper. It's called the Living Last Supper, and each one of us comes to life slowly but surely. In fact, if I brought it up on the computer here, there I am right there, and this time I'm playing this guy, Judas, the bad guy. So if you look at it, that looks pretty darn close to
Is
what
that the best of the bad guy?
That's the best of the bad guy, the best of investing, the best of the bad guy, and this is actually a real set. I mean, somebody actually painted that set. So if you look at the if you look at the Last Supper painting by Da Vinci, and you look at this, it's pretty close. So we all stay perfectly still. One by one, we get up and go to the mic and basically tell our story. And I love playing the bad guy. And as the guy in Seinfeld, I'm a very, very bad man. My soul isn't as evil as some think it is, nor is your soul as clean. And what would you do if you were in my place and wanted him to do something dramatic to prove his identity and usher in his kingdom? Should I ignore his remarks? Or, like the others, should I piously, self-righteously say to myself, is it I? No, hightail it out. Because what happens is basically the Living Last Supper is each one of us comes and if you remember at the Last Supper, Jesus says, listen, one of you is going to betray me. And each one kind of looked at themselves and, oh my gosh, is it
What are
I?
you, nuts?
Yeah, well, yeah, who's going to do this? Is it I? So each one of us kind of gets a little soliloquy of, who we are, because, you look at the apostles and most of you know, you can't tell the players without a scorecard, right? Can I just give you a broomstick and we'll just fix it all right now?
Right, I know.
Yeah.
Oh, that's right, sorry, you gotta.
Yeah.
So what dates we talking about? We're talking next week's the 2nd.
Yeah, I don't know what's going on here. There's some kind of like camaraderie thing.
I don't know if
going
you
on
look
that I'm
good with
just
the
not
beard
part of.
there, Brian.
No, I don't think
Let's
so.
see.
Anything serious with this? I mean, to have surgery.
Like brothers. Band of
Oh.
brothers. Okay, here comes
The way I do this
Is that
is
good? Thank you.
I'll
Yep.
go count down like this because we have to have 5 seconds of quiet before we actually record, and then at the very end we'll be quiet for so many seconds.
Okay.
And then I'll do here is introduce. We're coming back from break. We're going to ask the trivia question,
The trivia question.
which I don't know if you guys know the answer.
I
to
don't
that
even
one.
remember it, so.
That's like yeah. Rooms that
You have
can't hear
questions
each
for
other.
Brian? I mean, once we get going, I'm sure we can
Not
figure it all
not
out.
specific.
Alright,
You know,
we kinda know.
but yeah, you.
He can explain.
He'll explain what he does and
Oh, cool.
I'm Brian, your host again.
Excuse me,
Along
just
with
a
Brian
commercial break.
Capehart. We asked this trivia question.
You
It's
mentioned
private
the best
money.
name,
Brian
Brian
Capehart,
Capehart,
Director,
Central
Central
Park,
We're in the
Coffee
studio here
House
with on the TV
Randy
show
Williams,
Friends, who is the founder
Anybody?
and CEO of Karetsu Form and
Bleach blonde
the
guy.
largest
The
bleach blonde guy. Welcome to the Best of Investing. I'm Edward Brown, your host. Here's our format. A bunch of guys sitting around a bar. There's no bar. Having drinks. There's no drinks either. But we're talking business, and you, the audience, are listening in. Best of Investing is actually a radio show that has been around since August 2010, and it airs every Saturday on Fox News Radio, 9:10 a.m. at 1 p.m. Now, we're not a political show. We're strictly business, so everyone will be happy with that. We'll have various speakers, guest speakers, attorneys, accountants, economic advisors, business coaches. I have great co-hosts with me, Mark Hanf of Pacific Private Money and Brian Burke of Praxis Capital. Now, the cool thing about this is that you're actually getting to see scenes behind the scenes. So we all have headphones on because we're recording a radio show that is going to be airing on the air on radio. But in addition, you get to see what happens during the commercial breaks, how we prepare for the next segment. So it's a lot of fun. There's going to be a lot of levity because I like to try to throw a little bit of humor in there because just business by itself sometimes gets a little boring. So you got to always kind of break things up. Remember, I'm Edward Brown, wishing you the best of investing. Are you ready? Let's go. Welcome. You're listening to the Best of Investing on News Talk 910, sponsored by Pacific Trade Exchange. And Brian Capehart will be here in a couple of segments. So first of all, let's just introduce ourselves. I'm Edward Brown, and I'm here with Mark Hanf, who is the president of Pacific Private Money, California's fastest growing private lender, and Brian Burke of Praxis Capital. And for those of you listening for the first time, here is our format. A few guys sitting around a bar having drinks without the drinks. And what is our show about? It's about real estate, the financial markets, and other economic business of the day. And let's see, what do we got here? Okay, our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco, and the vacations are free. Their only request is a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Today's trivia theme is board games. I'll ask the question, and you guys are going to name the board game.
You ever get bored playing games?
Not these kind of
I
board
do.
games. Okay. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And in the future, you can always go on to a website called dar.fm and record this show. Quick reminder again, World Wraps in Corte Madera and Santa Clara is giving our listeners a free smoothie with purchase of a wrapper bowl. If you mention this show, The Best of Investing, go there for lunch today. They just added this awesome Polynesian pulled pork wrap. I tried it. It is phenomenal.
Sounds great.
It's awesome. Don't forget to mention Best of Investing for your free smoothie. And since our guest is not here yet, Brian and Mark, tell us what are going on in real estate, since there's two of you.
I guess, yeah, there's a lot going on then.
Yeah.
Well, Mark, I just read today that the LPS came out with their latest delinquency and foreclosure numbers, and they're reporting that loans that are delinquent have declined from in January from December, but that the percentage of loans in foreclosure actually increased a little bit. And as I think about these numbers, it seems to me that as the foreclosure numbers increase and the delinquencies that are your future foreclosures are decreasing, don't you think that spells us getting close to the third quarter of the foreclosure crisis?
I agree, Brian. I think clearly the numbers are indicating, light at the end of the tunnel. We're looking at a lot of decreasing rates in terms of new incoming delinquencies. Now, of course, the first question will be, well, what about all that shadow inventory? And yes, of course, we've got a lot of inventory to work through. And the good news is the banks are starting to process that and are putting that inventory back out onto the market through both the auction sales and through REOs. I think what we've seen, the evidence of the last couple of years, is there's just not going to be a tsunami. We're going to see that inventory trickled out over time, and we've seen predictions of anywhere from 2 to 5 years in terms of how long are we going to see this market where we have kind of a steady supply of foreclosure or distressed properties. I think I don't think that's necessarily a bad thing. I think the banks have figured out a way to stem what we've seen several years worth of deflation. And gosh, some of the numbers that came out this week also indicate that sales are up volume year over year,
Yep,
and prices
that's right.
are up slightly year over year. And so I think as much as most of us in the if not all of us in the real estate industry have been hoping, praying that, gosh, will 2012 be the year we hoped 2011 would, I do think the indicators are that we are looking at a market where we've largely hit the bottom, and that we're going to see kind of a stabilization.
Well,
which is really what we
remember
need.
the government not too long ago announced that they were going to keep interest rates down through 2014,
exactly.
right?
Yeah,
So
so you got
that
Stability,
should help.
stability is the name of the game. I
But
mean,
jobs,
that's
you gotta
what
have
the
jobs.
public, that's what the consumers need to see. That's what real estate investors need to see, is stability in the marketplace. A year ago at this time, what were we talking about at this show? We were talking about all the articles that said that were predicting anywhere from 5 to 10% further declines in prices. You're not seeing those articles anymore. That is no longer the prediction.
Yeah,
If
the
any-
decline already happened, so now that's over with.
It's,
So
so I think we're on the upswing.
And the construction industry seems to be picking up. I mean, you
Little-
call
little
contractors
bit.
now, they're getting a little bit busier.
they are, and you know what else is happening is Goldman Sachs just reported recently that the inventory of existing homes on the market declined by 21% in the year to January. So not only are the delinquencies starting to decrease, foreclosures are pushing through, but the inventory on the market is beginning to decrease. And we're seeing that in the real world every day as we're out buying and selling property all the time. And we're noticing that the active available inventory is also on the decline.
Now, how much of that has to do with people deciding, you know what, maybe the market's going up for a bit, maybe we shouldn't sell?
Some of that maybe, but when you think about it, what percentage of transactions are normal sales versus foreclosures? And they've been running in the 50-50 range,
About 50%,
60-40 one way, then they'll be 50-50. So the 50% that don't have to sell, that could be impacted by some optimism and wanting to hold out and wait. But the 50% that comprises the foreclosures, they're going to put those on the market regardless. They're not going to hold them off. What they're going to do is they might hold off the foreclosure in hopes that they're going to get a better disposition down the line. But once they've foreclosed on that house, they're not going to just let it sit there in their inventory.
And I'd like to think that the banks, that there are some people with intelligence monitoring these numbers on the bank side, those that are in control of how much distressed inventory they put back on the market. We all know they've got a lot of inventory, and I'd like to think that given the numbers we're seeing, where we're seeing a tightening of supply, now's the time for them to start releasing and opening up, not the floodgates, but just open the spigot up a little bit, get some of that product on the market, and allow the investors to come in and reposition that real estate.
Yes, I think that's exactly what's going to happen, and they have a little bit more confidence in doing so now too, not only because of the market, but also because of the recent settlement between the major lenders and the Attorney General, that kind of now they've got this the question of, is their paperwork in order and have they followed the proper procedures. They're getting that behind them. They've hired their staffs, they've staffed up to process the foreclosures, they've trained people, and they're getting to that point now where they're going to start releasing this product, but it's going to happen in a controlled and disciplined manner,
okay,
and that's
so
how it's going to keep the market stable.
So based on that, wouldn't you say that prices probably won't go up, they're just going to stabilize?
I think they're going to stabilize in the short term, but I think they're going to go up substantially over the 3 to 7 year time period. And nobody's building anything to add to the physical supply of inventory. So the only thing
Well,
you
not
have
yet, and
going on
also
right now
that's
is the
always a couple of
foreclosures.
years behind.
It is.
Yeah.
In a couple of years is probably an optimistic statement, because in California, how long does it take to actually get a project from raw dirt to sticks in the air? That can take years.
It took
to
me
get that
9
approved.
months just to get a permit to put a birdhouse.
Yeah, right.
just to, and that was not in the ground. That was to hang it from a tree.
Well, Brian, when you talk about prices going up, let's look at that a little bit, because we've talked about this in past shows. There are markets where homes are trading at significantly below replacement cost.
Yes.
And that's where I see the biggest opportunity for price gains. And I don't think I would even call that appreciation. It's really prices going back up to normalcy, because we're in an abnormal market.
And you won't get any building done because, again, if
it's
they
below
hit it-
replacement cost.
Exactly.
There's no motivation.
Now, that doesn't mean prices, say, in Marin and San Francisco are set to follow that same pattern, because we haven't seen such a huge price decline, but there's been such a pendulum swing in the opposite direction in certain communities in Northern California and the Bay Area, that it's just not sustainable for homes to trade at the price per square foot that they're trading at.
Well, I call it a return to equilibrium. And
Yes,
when you look
yes.
at median house price in California is, in the mid 100s range, 140, 160, somewhere in that range.
Is that what it is now?
It's gotten that low.
Whoa.
In Sacramento, you can buy houses for under $100,000. And
Oh, yeah, all
and then
day.
but the cost to build a house is over $300,000 when you factor in the cost to put in streets, curb gutter, sidewalks, permits.
Permits.
A permit can cost you 70 to 80
$70,000,
grand.
yeah.
So, and we're buying houses as rentals for as low as $80,000 in cities where it costs you $70,000 to get a building permit. You can't tell me somebody's going to come into that town and build more houses
Well, wait. Do
under
you
those
think?
conditions.
Do you think that maybe the counties will wake up? Like in Nevada, I remember they for commercial they started lowering the fees.
Some of them have. They've actually,
For residential?
several counties have been lowering fees with the idea that they would entice builders to apply
Yeah,
for.
well,
But
that
others
was
are
smart.
saying, geez, we're not collecting enough revenue. We need to raise the fees.
Well, but that's so stupid. That goes
Yeah,
back to what I said
nobody's
about.
paying it.
I mean, who was it? Ford that was having problems. I say, okay, well, here, Ford. You know what? I can help. I can solve all your problems. All you have to do is sell one car. Just sell it for $2 trillion. But all you have to do is sell one
Yeah,
car.
right,
I mean,
exactly.
it's really stupid. Okay,
Yeah.
we're going to cut to our first commercial break, and here is the first trivia question. Again, remember the theme is board games.
Board games.
Board games. Okay, what board game involves solving a murder using weapons such as a candlestick or a rope? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What board game involves solving a murder using weapons such as a candlestick or a rope? 888-912-1190. Make sure to include your name, address, email address, and phone number, and make sure that you spell out your email address. And we will be right back.
Do I have a clue?
What's that?
Yeah,
Yeah, that's a good.
That's one of the few board games I
I just
actually
want a
like.
clue.
You say you don't have a clue?
I don't have a clue. But can somebody give me a clue?
Okay, well that's a good. Oh, we're gonna do that.
I get a clue on that.
See,
So you know, it's interesting. It wouldn't, you know, getting back to the whole, you know, that price, you know, like a rubber band bouncing back in certain neighborhoods to, you know, to at least replacement cost. You know, there are neighborhoods, and I keep thinking of this one neighborhood in Sacramento where I've done a lot of loans in. And the initial bottom in this neighborhood, and this is like North Highlands, Del Paso Heights. There's a whole zip code there of thousands of homes that had its initial bottom in 2009. And I know a lot of guys that went in there and bought. And then it actually started to go up in 10, and then we had this double dip. So in 11, it went back down, and even in some cases went lower again in 9. But, you know, and everyone's going, woe is me, and I'm even in some, I put some people in loans where I can't get them back out anymore right now because the properties aren't appraising. But, you know, it wouldn't surprise me that in a very short period of time that those homes would suddenly go from, they were trading, you know, in the 100s, then they went down to the 50s in 09, then they went up to the 70s, then they went back to the 50s, and in some cases the 40s last year. It wouldn't surprise me to see those properties going right back up to 75, 80, maybe even 100,000, because again, these are 1,000 square foot, 2-1, 3-1 homes.
And it cost you $200 grand or more to build it.
Yeah, absolutely.
Yeah.
So there's just no way that those prices ultimately aren't going to bounce back, and it may happen relatively quick, because once the new inventory of distressed properties start to dwindle, boom.
what about a double dip recession?
No, I think we're beyond that.
I think we're past. Well, we
I
had
think
our
we're
double
past
dip in
that.
housing already.
Yeah, we had the double dip in housing.
So
Yes, we
I
did.
think
Fourth quarter
if
of
we
11 was horrible.
If we have a double dip
You already have this, right?
in the overall,
I'm ready now.
You ready now?
if we have a double
missed
dip in
it?
the overall economy at large, it's just
Yeah.
going to cause further stagnation.
Yeah,
It's not going to cause the prices of housing to drop more than they've already done. I don't think.
I don't think so either. I think we're.
Okay, one. Now I gotta do it slow or fast. 1, 2,
I think we have a little
3.
stagnation.
Oh,
At least
yeah.
it's not
Wait,
stagflation.
Now you have to do it twice.
I gotta have Yeah.
Oh, any hair?
Very little. Fortunately, I got the stickers.
Okay.
All right.
Okay, guys.
Water here. I'm ready.
Hold
Yeah.
on here.
Any other goodies in there? I see you scrolling through.
I
I
know.
wish I could get that blog shelf. They just. I haven't looked.
I'm
Maybe
just
they.
amazed.
I was waiting for them to put it back on
Yeah,
again.
he should be here in 5 minutes. We could be.
I wish there was a way to like.
We
Well,
can hang you off.
you know what?
Kind of hang you off the roof.
There are some blue buttons on some of these where for the firemen to
Yeah.
punch
Really?
out. Yeah, but these don't open,
Yeah.
and I don't have any scaffolds.
So we're gonna go into email time then.
That would be an excellent
Let's
idea.
do email time. That'll take up a whole segment.
Yeah.
All right, I'm ready.
What's ready? Okay. Brian,
So if he comes in, do I just go?
Actually,
Yeah.
You know what? You could probably just leave it just like that. I don't think it.
We'll close it a little bit.
Is that fan making too much? You know what? I'm gonna turn off the fan.
I'll get it.
I don't hear it, but I don't hear
You have to
anything.
climb a mountain to get to it.
Because I don't think it's that warm right now.
That's fine. Yeah.
Okay, so that was seconds here. Okay, you guys ready?
Yep.
Ready?
Make sure I got that question here. Okay, so when I come back to you, I'll say, Brian, what's the answer? And you're gonna say,
Can you
I don't
give me
have
a
a
I don't
clue.
know.